Good day everyone, this is the House of Samson and today we're gonna discuss the bank reconciliation statement. Ms. Cheryl Uy will describe the nature of the bank reconciliation statement.
What is a bank reconciliation? A bank reconciliation is the process of matching the balances in an entity's accounting records for a cash account to the corresponding information on a bank statement. The goal of this process is to ascertain the differences between the two and to book changes the accounting records as appropriate. The information on the bank statement is the bank's records of all transactions impacting the entity's bank account during the past month. Bank reconciliation statements ensure payments have been processed and cash collections have been deposited into the bank. The reconciliation statement helps identify differences between the bank balance and book balance. In order to process necessary adjustment or corrections, an account typically processes reconciliation statements once a month. A bank reconciliation should be completed at regular intervals for all bank accounts to ensure that a company's cash records are correct. Otherwise, it may find the cash balances are much lower than expected, resulting in bounce checks or overdraft fees. A bank reconciliation will also detect some types of fraud after the fact. This information can be used to design better controls over the receipt and payment of cash. If there is so a little activity in a bank account that there really is no need for a periodic bank reconciliation, you should question why the account even exists. It may be better to terminate the account and roll any residual funds into a more active account. By doing so, it may be easier to invest the residual funds as well as to monitor the status of the investment. Bank reconciliation statements confirm that payments have been processed and cash collections have been deposited into a bank account. All fees charged on an account by a bank must be accounted for on reconciliation statement. After all adjustments, the balance on a bank reconciliation statement should equal the ending balance of the bank account.
So good morning Sir Presco, good morning classmates. Ako naman po ang magre-report and my report is all about reconciling items. What is our agenda for today? We're going to discuss reconciling items, deposits in transits, and outstanding checks. So ano nga ba yung reconciling items? Reconciling items is a difference between balances from two sources that are being compared. These items are stated in an account reconciliation so that the balance from one source is adjusted by reconciling items to arrive at the balance from the other source. Examples of reconciling items in a bank reconciliation are deposits, in transits, and cash checks. So yun nga. To be short, no, yung reconciling items, sila yung mga chine-check tuwing account reconciliation. And yung mga examples na itatalakay natin ay deposits in transit and uncashed checks. So, deposit in transit. What is deposit in transit, no? A deposit in transit is cash and checks that have been received and recorded by an entity, but which have not yet been recorded in the records of the bank where the funds are deposited. If this occurs at month end, the deposit will not appear in the bank statement issued by the bank, and so becomes a reconciling item in the bank reconciliation prepared by the entity. A deposit in transit occurs when a deposit arrives at the bank too late for it to be recorded that day, or if the entity mails the deposit to the bank, in which case a mail float or several days can cause an additional delay, or the entity has not yet sent the deposit to the bank at all. So yung deposit in transit, nangyayari siya, for example, nag-deposit ako ng end of the month na araw, hindi na siya recorded kasama dun sa mga, kasi parang cut off ng ano yun, ng isang bangko yung end of the month eh. So hindi na nila kasama yung yung dineposit ko that day. Mare-record na siya next day na, ganun. Or kunwari nag-deposit ako through online, no? Nag-deposit ako or yun, nag-deposit ako through online. So hindi lang naman yun yung transaction na pinaprocess everyday, no? Iba-iba rin. Kaya meron siyang delay na mga ilang araw. Yun ang tinatawag na deposit in transit. So ito yung example. On April 30, ABC Corporation receives a check from a customer in the amount of $25,000. It records the check as a cash receipt on the same day, and the deposits the check at its bank at the end of the day. The bank does not record the check in its book until the following day, May. Thus, when ABC controller completes the end of the month bank reconciliation, she should add $25,000 to the cash balance shown on the bank statement in order to have it match the cash balance shown in accounting record. So yun nga, no, nag-record siya ng may nag-deposit ng $25,000 sa ABC Corporation, no. So dahil end of the month na, sa May 1 na siya mare-record para ma-match yung balance sa accounting records ng ABC Corporation. Bali parang kasi parang cut off ng ng banks yung end yung last day ng buwan. So parang mare-record na siya sa kasunod na araw na. Outstanding check. What is outstanding check? The definition of outstanding check is a check that has been written but it hasn't been cash deposited by the bank or otherwise cleared the bank. An outstanding check can be a personal or a business check. An outstanding check represents a liability for the payer must be sure to keep enough money in the account to cover the amount of the outstanding check until it is cash, which could take weeks or sometimes even months. So yung mga outstanding check, sila yung mga check na kunwari, example, ako, may pinagbigyan ako ng isang cheque to pay for something. Pero, or binigyan ko lang siya ng cheque. So, pag hindi niya pa parang pinapalit yung cheque na yun or hindi niya pa ginamit, ang tawag doon ay outstanding check, no? Although yung mga cheque may expiration date na hanggang 6 months if I'm not mistaken. So, pwede niya pa rin magamit yun yung check na yun. So, yung yung risk niya kasi pwedeng magamit ko na yung lahat ng pera ko dun sa account ko, tapos tsaka niya palang ipapapalit yung cheque. So ito yung mangyayari. Non-sufficient funds. The term non-sufficient funds or insufficient funds refers to the status of a checking account that does not have enough money to cover transaction. NSF also describes the fee charge when a check is presented but cannot be covered by the balance in the account. So yun nga. Pag ginamit yung outstanding check na wala nang laman yung account ko, magkaka-charge pa yun. At minsan hindi nila tinatanggap yung cheque na yun kasi nga wala nang laman yung account ko. Tapos pwede rin ito mangyari, isa pa, overdraft. Overdraft occurs when there isn't enough money in an account to cover a transaction or withdrawal, but the bank allows the transaction anyway. Essentially, it is an extension of credit from the financial institution that is granted when an account reaches zero. The overdraft allows the account holder to continue without withdrawing money even when the account has no funds in it or the insufficient funds to cover the amount of the withdrawal. So yung overdraft naman, yun nga yung kunwari may pinagbigyan ako ng cheque naman tapos nagamit ko na lahat ng pera or yung natirang pera ko dun sa account ko. Tapos may nagpapalit pa ng cheque na binigay ko. Ang mangyayari doon, parang magpapahiram yung parang magkakautang ka pa kasi yun nga hindi niya ginamit agad yung yung cheque. Akala mo nagamit niya na pero hindi pa pala. So yun yung tinatawag na overdraft. And so ito yung mga references po na ginamit ko for this presentation. Thank you po sir and classmates for listening.
Analyze the effect of the identified reconciling items. You are maintaining checking account with the bank. I guess you are familiar with bank reconciliation. Always receive a bank statement with attachment. All check you issued and paid by the bank are attached with stamped cancel. You will also find attached there to debit and credit memos that have affected your account balance. What do you call these items? You notice that as always your cash balance per your record, those that agree or balance with that shown in the statement. At end of every month, filing the cash records of the depositor with the bank statement received from the bank will bring forth the following reconciling items. Number one is book reconciling items. There are credit memos, B debit memos, C errors. The number two is bank reconciling items. Letter is deposits in transit, B outstanding checks, C errors. What is credit memos? What are credit memos? Credit memos have the effect of increasing the bank balance. They are items credited by the bank to the account of the depositor but not yet recorded by the depositor as cash receipts. A typical example of credit memo is a note collected by the bank in the favor of the depositor and credited to the account of the depositor. Other good examples are mature time deposit transferred by the bank to the current account, the deposit, and receipt of the bank loan credited to the depositor's account. Debit memos. What about debit memos? Debit memos have the effect of decreasing the bank balance. It refers to items paid by the bank which are charged or debited by the bank to the account of the depositor but not yet recorded by the depositor as cash disbursements. Typical examples are as follows. A. NSF or no sufficient fund checks. Checks deposited but returned by the bank for the insufficiency of funds. B. Technicality defective checks. Checks deposited but returned for having no signature or counter-signature erasures not countersigned, mutilated checks, or the amount in figure conflicts with the amount in word. C. Bank service charges. Charges for interest, collecting, checkbook, and penalty. Here. Reduction for loan. Decreasing current account balance of the depositor. Deducted by the bank payment for loan owed to the bank which has already matured. The preceding are the reconciling items in the book balance of the depositor. There are items that require adjusting entries in the book of the depositor to bring the cash in the bank balance to its correct amount for balance sheet purposes. Considering the bank reconciling items, deposits in transit for collection already recorded by the depositor as cash received but not yet reflected on the bank statement. Deposit in transit. Example of deposit in transit are collections already forwarded to the bank for deposit but too late to appear in the bank statement. And undeposited collection or those cash on hand awaiting delivery to the bank for deposit. Standing check. Standing checks are checks already recorded by the depositor as cash disbursement but not yet reflected on the bank statement. They include checks, though and already released to payers but not yet presented for payment to the bank. Errors. Errors will have analyzed for proper treatment. There are reconciling items of the party who committed them.
What is bank reconciliation? A bank reconciliation statement is a document that compares the cash balance on a company's balance sheet to the corresponding amount on its bank statement. Reconciling the two accounts helps identify whether accounting changes are needed. Bank reconciliations are completed at regular intervals to ensure the company's cash records are correct. They also help detect fraud and any cash manipulations. Bank reconciliation procedure. On the bank statement, compare the company's list of issued checks and deposit to the checks shown on the statement to identify uncleared checks and deposit in transit. Next, using the cash balance shown on the bank statement, add back any deposits in transit. Then next, deduct any outstanding checks. This will provide the adjusted cash balance. Next, use the company's ending cash balance, add any interest earned and notes receivable amount. Deduct any bank service fees, penalties, and NSF checks. This will arrive at the adjusted company cash balance. After reconciliation, the adjusted bank balance should match with the company's ending adjusted cash balance. What is bank reconciliation and examples? Bank reconciliation is a process that gives the reason for differences between the bank statement and cash book maintained by a business. Not only is the process used to find out the differences, but also to bring about changes, relevant accounting records to keep the record up to date. Understanding the bank reconciliation statement. Bank reconciliation statements ensure payments have been processed and cash collections have been deposited into the bank. The reconciliation statement helps identify differences between the bank balance and book balance in order to process necessary adjustments or corrections. An accountant typically processes reconciliation statements once a month.
Step 1. First of all, compare the opening balance of both the bank column of the cash book as well as the bank statement. The two can be different in terms of uncleared dues like unpresented or uncredited check from the previous month. Step 2. Start by comparing the credit side of the bank statement to the debit side of the bank statement. Also, compare the credit side of the cash book to the debit side of the cash book. The two must be equal in the both documents. Tick the columns if you can't find any error. Step 3. Analyze entries in the back column of the cash book as well in the checkbook. Look for records that have been missed to be posted in the back column of the cash book. Make separate lists of all such items and list them in the cash book. Step 4. Correct the errors present in the cash book, if any. Step 5. Calculate the balance after revising the update cash book bank column. Step 6. Prepare the bank reconciliation statement accordingly. And make sure to add the update version of records. Step 7. Banks are not aware of unpresented checks because the beneficiary doesn't get the check. It is a case when the business firm to forget to deliver the assigned check to the issue name. Step 8. Make all the final adjustment and check the bank errors in the bank statement and firm's error in the cash book. During heavy transactions days, firms or bank and may make mistake in nothing entries. The process removes those errors. Although it consists of fine work, reconciliation becomes a helping hand at hard times. Step 9. The result of both the document's bank statement and cash book must match with each other.